Last time we started looking at the first category of trading strategy that I'm covering in this series, which was mean reversion, and showed examples in terms of trading ranges in price action. Today I turn my attention to the next category I'll be covering, breakouts. Darwinex is a UK FCA regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. If you're a talented trader looking to attract investor capital to your strategies, Darwinex is the fastest way for you to do this. We enable traders to raise third-party investor capital and then charge success fees on high watermark profits. Additionally, Darwinex itself invests in its traders with our seed capital allocation program that allocates up to 90 million euros per year in successful trading strategies. So, if all of that sounds interesting, learn more by clicking on the link here, or you can find further links in the description right below. Now back to today's tutorial. Breakouts are the ideal type of strategy to cover after that of mean reversion within a trading range. This is because at some point in time, all trading ranges will come to an end. And how do they come to an end? With a breakout. And breakouts are one of those characteristics of price action that many traders attempt to exploit. So let's take a look. Last time we looked at this price action between the two green lines, which was this trading range. Today I'm going to focus on this section here, which is the transition from that trading range through a breakout into a new trend. But it's the breakout that I'm going to focus my attention on. Now, there are many ways of identifying when a breakout is occurring. So for example, last time we looked at these two moving averages. One is a 20 period and one is a 50 period. And as the breakout begins to take hold, you'll notice that the gap between these two moving averages increases significantly. And the crisscross behavior that we've seen up until this point ceases to occur. You'll also notice that there's a sudden and abrupt upturn of both of these moving averages as the price powerfully breaks out of the trading range. So there are several clues here that we can begin to look at. However, most people find it most useful to think of this in terms of support and resistance, and focusing on the support and resistance that the trading range has provided up until this point. So I'm going to draw in a level of resistance which goes through the main points that were reached in the trading range here, and a level of support underneath. And so if you're a discretionary trader, it might be the strong break of this particular line of resistance here that signifies to you that the breakout is in progress. However, although not impossible, this kind of logic is much more difficult to programmatically code. So depending on your coding skills, you might want to look for an alternative indicator that tells you when the breakout is occurring. I'm just going to expand the chart a little so that we can see the breakout area more clearly. Okay, so we've got the end of the trading range here and the start of the breakout here. Let's come back to the concept of chasing price that we looked at 2 episodes ago. And as you know, I said I think it's a really bad idea to do this. But do we have a choice with a breakout? Surely we're going to be entering our position as the price strongly comes through this line of resistance, aren't we? Well, yes, you could potentially do that. However, that can be fraught with a number of issues. Firstly, when this is a false breakout, if we're entering as the price goes through this level here, there's a very, very good chance that price will actually just get pushed back down into the trading range and the range will continue. But of course, by this time, you're already in your trade. And now you're sitting on a loss. And also, you've broken this rule of following the crowd and buying with them as the price comes out here. So there's a much better way of entering a breakout trade. And this doesn't break the rule of following the crowd or chasing price. Look what happens after the breakout has occurred. The price actually comes back down and it hits this line. Now, you will be surprised at the number of times that this happens during a breakout. And I'd encourage you to go away, look for trading ranges, draw in your lines of support and resistance, and look at the price characteristic as the price comes out. There will be a huge proportion of those where the price breaks out strongly, comes all the way back down, or sometimes maybe only reaches 80 or 90% of the way back down, but nevertheless retraces before the price then eventually does continue on its way with the new trend. Let's think about this characteristic for a moment. How can we turn this to our advantage so that we're not chasing price? Well, when the price breaks out here initially, we do nothing. We just wait. And then, as the price begins to retrace back towards the line of resistance, which of course now is a line of support, if we're going to enter our long trade now, we're opening it in the opposite direction to the current price direction, which is down. And so again, we're avoiding chasing the price. An additional advantage of doing this is that we can sit tight and make sure that this is definitely a substantial breakout before we commit to our new position. And so we get to see exactly how big the breakout is. And we can then make a decision of whether we want to trade that or not, depending on whether we think it's a true or a false breakout. And so this area here might be an area you'd consider for this. But of course, you have to backtest this. If you're an algo trader, you need to look at substantial examples of this if you're a discretionary trader to make sure that you're happy with this. Don't take my word for it. You need to do your homework here. But for me personally, this is the way that I prefer to trade breakouts, by waiting for that retracement. So we've broken out and we're now in a trend. But what if you didn't manage to trade the breakout and the trend is now in full flow? Is it too late to open a position? Well, there are other techniques to get into existing trends. And this is going to be the topic of the next episode. So be sure to tune into that. And now until next time, trade safe.